Bitcoin, the bubble and the bust is coming. With the economic impact of the pandemic, governments pumping massive amounts of money into the economies, real estate's looking less attractive, and fiat money becoming less dependable by the hour. Investors are definitely now looking towards better asset class such as gold, crypto, as well as stocks aligned with the digital economy. The influx of institutional investments into Bitcoin is something crypto fans have been predicting for years now. Until now, it's often seemed like a distant dream. But recently, it feels like not a day goes by at the moment without another industry giant announcing that they are converting their cash reserves into Bitcoin. From fintechs to business intelligence leaders, companies across a range of sectors are making the leap. The question is, why now? Does it really help Bitcoin in its quest for mass adoption? Is this going to rapidly create a bubble likely to burst? And most importantly, is it necessarily a good thing for your investments? You are about to find out. Welcome to Galactico. This is a channel committed to bringing you the very best of business information and golden nuggets from galactical individuals and businesses, showing you how they got there and most importantly, how you can get there too. If you are not subscribed yet, you are missing out. Kindly hit the subscribe button below and we will be happy to have you on board. Now, let's dive in. Bitcoin. The golden digital currency has surged higher again, soaring to a fresh new all-time highs of over $40,000 per Bitcoin after beginning last year at under $19,000. The Bitcoin price, up a staggering 30% this week alone, climbed to $24,220 on the Luxembourg-based Bitsmap Bitcoin and cryptocurrency exchange before falling back slightly. However, amid this week's huge Bitcoin and cryptocurrency rally, which has added over $100 billion to the value of the world's digital tokens, analysts have warned over the risk of Bitcoin and cryptocurrency investing. It's been 3 years since the bubble that inflated the value of the digital currency from $5,000 to $20,000 in just 3 months burst in spectacular fashion, plunging the value of this much glorified digital asset more than 80%. The cryptocurrency is again on the verge of a record high. For the past few weeks, it has been trading above $30,000, up from $10,000 in October and $5,900 in March, amidst many doubters and big guns of the financial industry. The price of Ethereum, the second largest cryptocurrency by market value, has also surged over the past few months, up from less than $250 in July to over $700. There are wild reports that by the end of 2021, Bitcoin could surge to $100,000 or even as high as $300,000. While it's great to see market rallies and see news organizations turn attention to this emerging asset class in a new way, we cannot emphasize enough how important it is to understand that investing in crypto is not without risk. Crypto is a very volatile asset class, and even more so than the types of traditional financial instruments that most investors are used to. For example, this means that the market can move in either direction much faster than equity markets. The Bitcoin price, after beginning the year at around $7,000, crashed to under $4,000 in March as the coronavirus pandemic caused markets to go into meltdown. It quickly rebounded to around $10,000 and began climbing towards its 2017 all-time high in October. The Bitcoin price surged as accelerated in recent months as a growing number of high-profile investors name Bitcoin as a potential inflation hedge, and some of Wall Street's biggest banks changed their tune on the digital token asset class. Like all asset classes, crypto markets will rise and fall over time. As an investor, you should know that there will occasionally be strong market rallies where prices will rise quickly and aggressively. While we are always excited to see increased interest in crypto, it's also important to point out that this is not only a time of high volumes, but also price volatility. Here are some very key things that you must know as the price keeps climbing up. Now, Bitcoin is the best store of value currently, but Ethereum is a better investment on the short run. As it stands, Bitcoin's current market cap is sitting comfortably at about $600 billion at a valuation of $30,000 and above, which automatically means for your Bitcoin to be 4 times at over 100k plus. It would take the entire Bitcoin market cap to get over 2 trillion, which is indeed a tall order in the nearest future. The rationale seems even more plausible these days. As Bitcoin's price hits a new all-time high, the number one cryptocurrency by market capitalization is now more expensive and thus potentially a riskier bet for new investors coming in. It can be expected that investors are looking for a new opportunity in crypto at affordable prices. Given that Ether is trading roughly 50% below its all-time high of $1,432.88, it is tempting to believe that there is a bargain to be had. What's more, the Ethereum 2.0 upgrade to increase the network's scalability, security, and energy efficiency has generated a lot of hype. Ether, on the other hand, is currently trading at just a little below $1,000 with an overall market capital of just over $100 billion, which means if Ethereum was to at least even 5 times your investment, it would have just grossed the market capital of $500 billion, which, in sincerity, is a very likely thing to happen in just less than 4 months, considering the perks Ethereum 2.0 is bringing to decentralized networks. Now, let's look at it this way. One of the things driving Bitcoin's prices up is the sudden influx of cash from institutional money, and this feat will continue until February, driving the price up and up even as high as $50,000 by then. But it is apparent you and I know that these guys are in it for the profit, and the strategy from time memorial is for them to pump and dump. Now the question is, will this happen? The answer is surely, when will they start making this dump? That one we can't guarantee you. But what we can tell you is that once the price of Bitcoin hits $50,000, just run. Cause you, as a retail investor that you are, it will be best to cash out on some of your profits to invest in Ethereum, the next cryptocurrency with the biggest market cap, and very much still undervalued, we must admit. We definitely know this might piss off a few Bitcoin maxis and Bitcoin bulls, but we as a team, we have been here before, and we know this is what is going to happen. And come to think of it, you are definitely not going to take a loss. Hypothetically, through painstaking analysis, it's apparent that by the time Bitcoin approaches $50,000, Ethereum will be a little over or below its all-time high of $1,400. And if there is one thing we can guarantee you through analysis and moving on from here, is that it will certainly take a shorter amount of time for Ethereum to 5 times from over $1,000 to $5,000 than it would take for Bitcoin to 4 times from $50,000 to over $200,000. The long game. Okay, as an investor that you are as of today, you might have asked yourself, am I in it for the long run or for the short run? You see, for us, we believe that for you to get the most out of the crypto world, it has to be a long-term game. Because whether you are a believer or not, crypto and the digital economy is here to stay. And Bitcoin especially is trending towards the world's #1 digital store of value. Will one Bitcoin ever reach over 100,000 US dollars in valuation? Yes, it would, and even beyond it. And we say that confidently in every sense. But when will this rise happen? That is definitely not something we can give you answers to. But it is apparent for you to know, as a retail investor, that the crypto market is a very volatile market. And as a crypto market watcher, that we also have been for the past 24 months, our advice for every one of our people is that once Bitcoin hits that 50,000 US dollar mark, we would say you exit and invest half of your portfolios in more reasonable, stable and traditional means of building wealth like real estate, stocks and companies of real value. Until then, enjoy this bull ride and squeeze as much percentage gain as you can. Like Bart in The Simpsons will always say, nothing lasts forever. Neither will this one also. The whales and institutional banks are soon coming for the money. Be very aware. Thank you for watching to the end of this video. We sincerely appreciate having you here. And also thank you for continually supporting our young and growing channel. Kindly please hit the subscribe button once again if you haven't, as this helps us to grow immensely. Also drop your comments, as this also helps increase our visibility to continually creating great contents for you. And don't forget to tell us which was your biggest takeaway and which stable investments you are indeed looking to invest in this year. Feel free to smash the like button right now and share to your friends and family. We sincerely appreciate your kind gesture. Till next time, remain a Galactico.